How are you guys doing today? Welcome back to another live stream here on the Everyday Growth Advisors pre-market. Hope you guys are having a good morning and had a great weekend as usual. Welcome back. We have a little bit of stuff to unpack for this week, and then for Wednesday and Friday's stream, I'm going to be holding it on Instagram Live. So make sure that you tune in. I'm going to do it, I think, 15 to 20 minutes before the market opens on Instagram Live for Wednesday and Friday. And if that format works out, you know, where you can kind of see my face and kind of talk to me, I think you know, it'd be more engaging. Stick around and show me some love over there. We can also do some charting together perhaps, but I will be in Phuket, Thailand on Wednesday, so therefore I will let you know how it goes on IG story and keep you guys updated on my plans. So this week is going to be a FOMC week, which means the Fed reports and is going to be deciding key interest rates. We have mainly a lot of wishy-washy positioning from last week, but then we have a lot of things to cover on the technical side, so let's get into it. From the macro perspective or the monetary policy perspective, let's talk about that for a second, and then we're going to head into the rest of it. So if you look at the bond market, still pricing in that QT, TLT here still has, you know, well, it's on a potential buy zone here, which is a demand zone, but we could really get down into 102 or 103 before we start bouncing on the you know, the fat tail of the bond market. In terms of the 10-year bonds, a bit more of a deeper sell-off there, and has also a demand zone coming up at around 109, 108 for TLH, which is the 10 to 20-year bonds. So keep your eyes on that. Bitcoin selling off 3% today, pre-market, and through this, if we break through this 17,845, that's going to open up the $12,000 support. And you know, just the way that everything's positioned right here, even with the indices, this could be a little panic selling moment if things get really bad. So what dictates if things get really bad? There are a couple of things. The first things first, the VIX is still elevated here at above between the 26 to 29 level. This gives us that fear still kind of elevated levels in the market. We haven't gone above 29 and approached 31 yet, so we don't have peak fear, or we don't have the 36 reading, which is also peak fear. But that can only come if we get that abrupt sell-off. And if that abrupt sell-off happens, then we see the VIX getting up to 35 once again to retest those levels from, you know, June, and then also 2 times in May, as well in April, February, January. The VIX has come up to those levels pretty much every time that the market sold off very abruptly. So those are important things to note, that once the VIX starts to spike here, then you know that increases the odds of the market to sell off. Now remember that the VIX is a gauge for fear, but how? It's not really a gauge for direct fear. Remember that. The VIX, or the CBOE index, is a gauge for how much out-the-money options are being bought on the options chain. Okay, so remember, whenever there's equal betting or extended betting on out-the-money options, or you know, people are buying up all the out-the-money options on either side, bullish and bearish, that increases volatility. That is what the VIX is measuring, volatility. And when volatility increases, that means fear increases, because there is increase in uncertainty. That is what the definition of the VIX stands for. That is what the VIX measures. It's not about just fear outright, like the emotion or greed, the emotion, but rather it measures the willingness for players in the market to purchase hedges or also take extreme positioning in either side of the market. That increases volatility, and in turn increases the fear. That is what is measured by the VIX. Okay, so when the VIX starts to get higher, then everything gets more expensive, because there's increased betting on every single kind of you know, option strike and things like that. Okay, so those two risk indicators, that's something that we look at. This Fed meeting with the FOMC, a 75 basis point rate hike is already priced in at this point. I believe that the current pricing in is sitting at around 78 basis points. So 75 is already fully priced in. It's whether we want, or is the market going to continue to price in a potential 100 basis point, which is currently at 20 to 25% chance, okay, based on the Federal Open Market, the market for the indices, okay. So 20 to 25% is what market's expecting, a 100 basis point rate hike, which is, so in other words, not so likely. But you know what? The Fed has been pretty hawkish, so we have to say everything's on the table, right? We can't say that that's not on the table. Now, this is going to open up the question for whether we are going to experience the hard or soft landing route, right? When we talk about everything that's going on with FOMC and everything that's going on with the S&P 500 or the markets in general, the market is trying to price in the likelihood of a soft or a hard landing. The soft landing means the Fed's able to carefully control the demolition of inflation. That means inflation comes down and the economy also improves and prospers at the same time. Okay, that's a soft landing. It means things are easy. We have inflation comes down, job market continues to be strong, economy continues to be strong. That's a soft landing. Hard landing is the rhetoric that the inflation either remains high or the job market and the economy doesn't really recover that well, right? So either end of that, if those two things don't get balanced, then that's what we're looking at in terms of a soft landing, okay? And you have to be aware of that situation because that is what the market's trying to price in right now, all right? The likelihood of whether are we going to go further in a deeper recession or are we going to come out of it quickly. That is what the discussion and the status quo of what's on everybody's mind and in terms of institutions is about, okay? It's not so much about, just technicals, but it's also about where are we going to be able to find, the recovery of the economy, okay? And then you had late last week, the FedEx CEO coming out and smacking around, talking about how he sees that, we are in some deep doo-doo. So that spooked markets as well, and sent the FedEx stock tumbling down 20%. That was not a good vibe, right? Now, let's jump into technicals a little bit. If we look at the S&P 500 index, we obviously last week I've been blaring the alarms repeatedly, and we've been covering this every single step of the way with you guys, telling you guys to be cautious, right? This was a potential rejection level. And then after CPI print came out, remember I was telling you guys about don't be too overly exuberant to the upside after we got this bounce, because we could easily reject above at these levels here. And we did get that rejection, and now we're sitting at 38.25, which is the last line of defense here for the interim local wave structure, right? And if we count the third wave to be this wave, which if we are saying that this is the third wave of this down wave, then this wave is likely to be the biggest wave of this cycle. And that means that we go further down, like really, really further down, like we're talking 36.50, 37.25, or even 35.36. That's, possibility of the S&P 500 coming down here is definitely on the table if indeed this is the third wave of the count. Obviously, we're going to require some kind of a freak show event. And so is that going to be the Fed FOMC meeting? That's something that we have to, very carefully weigh before the actual event. As of right now, there is no reason to go bullish just yet, right? We broke below the trend of June and July, the upward trend that we were facing here, right? You could see this trend line was kind of holding us in place for this upside. And on Friday, we broke and closed below that trend. That means that there is possible further downside into the 36.50, 37.25 range, which is the S&P 500 fair value estimates. So this opens up possible additional downside this week. But however, we have to be very careful on betting on short-term expiries, because you take short-term expiries in this market and you get squeezed to the upside. Let's say we go up to retest the 3900 level, or somewhere around here, which is let's say 3963, or even if we get up to around 44,000 and try and retest 4,000, then that's going to be a massive squeeze for shorts, and then that might cause a lot of pain. So if you're planning to take more short positions, please wait to see if we are indeed going to close below 38 38.25, or at least break 38.25 before you add to your short positions. Personally, I'm in very light short positions right now, not super aggressively, overly in heavy put positions, but I do have some bearish positioning, right? So don't overly allocate your capital right now in terms of where the risk is off. Obviously, there is upside risk to reward ratio, but there's also downside risk to reward ratio. All I'm saying is try not to chase and get yourself into a situation where you're going to be chasing premiums that are super high, especially for the put side. So be really, really careful. Okay. My recommendation is wait for either the break below 38.25 and be patient about it, and then you can take that downside if you get that confirmation hold below it, or you simply wait for the retest of the 3900 level or 38.95, somewhere around there, for taking on additional downside exposure. However, here's another minor caveat. If this indeed is wave 3 of this Elliott wave series, then wave 3 typically does not have any pullbacks. Okay. And wave 3 is a wave that typically falls just free fall, parabolic. So therefore, it's very difficult for us to say what is or not going to happen with certainty, but you have to keep an open mind and go pivot by pivot. As I always mention, go pivot by pivot. So the next pivot will be 37.30, and below 38.25 is where we'll be dropping to there. Once again, thank you guys for tuning into this live stream. Appreciate you guys. If this is your first time here, go ahead, drop in the comments what you want me to cover in terms of tickers, if you want me to break down a specific ticker. If not, I appreciate you guys being here. Make sure you click that subscribe button and like. I truly appreciate you so this stream can reach a broader audience. That's how the YouTube algorithm works. So truly, truly appreciate you guys taking out time to be here. So yes, on S&P 500, that's your technical update. Once again, below 38.25 looks like a nice downward move into 37.25, and that is what I'm largely expecting. However, I will add bearish positioning only after we break, and add exposure to that downside only after we break and hold below it. I don't want to be unnecessarily squeezed in this situation heading into FOMC, and FOMC tends to be a very volatile week. I expect trading to be quite light in terms of momentum and volume all up to FOMC, and then FOMC might give us like a squeeze event of some kind. So what are the expectations? I've put them all in the newsletter, but in case you are not subscribed to the newsletter, let me just kind of round it up. 75 basis point rate hike is largely priced in at this point, but a 100 basis point rate hike is also on the table. If a 75 basis point rate hike comes up, then there is a possibility that market participants cover some of their shorts and take profit before trying to figure out what the next move will be, or they engage in upward positioning, taking exposure to the upside. Okay, so that could be two things that happen at the same time, and then it causes a big wave to the upside. Second is if the Fed say 75 basis point, but then it's overly hawkish, then that opens up downside into 3600 or 3700, this level here, right? And that is also the case for the 100 basis point rate hike, because that's going to naturally push the bond yields up, and then more quantitative tightening is going to be expected, and that's going to just cause a lot more of devaluations of higher beta stocks, and also devaluations of the major structure breadth of the S&P 500. So that's going to cause more devaluation if we get that. Okay, so that's your summary. Nasdaq, on the other hand, definitely has a slightly different looking chart. We are already broken down below that pivot, and so remember, as long as we can, hold below here, and we could, that opens up Nasdaq 11,070, or let's just say 11,100 here to the downside. There's also a major support at 11,468 roughly. Loosely translating, that's on the QQQ is going to be, let me see here. So breaking below 283, let's just call it 282. Breaking below 282 on QQQ is going to open up the downside at 271, basically, or 269 even. And that's a possibility for this structure to complete this wave down. So I know many of you follow QQQ, so maybe I'll just do it on QQQ instead from now on. 270, this zone right here, 260 to 270 is also the last line of defense on QQQ. So this level here all the way up to around, I want to say here. This is last line of defense here for support. If we break below this, then hallelujah, we probably see further downside in the Qs, and that opens up, like, you know, a lot of nasty levels like 250, and then the next one would be 230 or 235. Excuse me. Excuse me. And if 235 or 236 happens, then that's, you know, just gonna be very, very nasty. So I hope that we don't get there, but we'll see. We'll see what happens. Similarly, a lot of stocks are looking very beaten down, and they're all at pivot points. Apple is one of them, but closed with a pin bar on the daily chart last Friday. We'll have to see if it can find any support here temporarily. Nvidia sitting at a very crucial level here. If it loses this, it's going to go all the way back down to around 117 or 116. Microsoft also sitting at a very crucial level here. A break below here, you know, sends us down to retest 238, and then below that is going to be like 225 or 226, that area. Google also, right? So look at all the major market cap stocks. They're all sitting at key pivot points. So therefore, it's either a bounce or a further sell-off here, and that's very uncertain at the moment. So yeah, that's all I have for you guys this morning. Just make sure that you're following along in terms of price action and go pivot by pivot. Don't try to guess immediately what the movement's going to be, down or up. This is pointless. Just look at what the price action does, and then you can make your decision after that. Okay. Apart from that, I wish you guys a good luck trading this week. I will once again, I will hold Wednesday and Friday's pre-market live on Instagram, so make sure that you guys tune in there instead. And I will be in Phuket from Wednesday all the way to next week Tuesday. So I'll be on holiday, but I will be definitely trading from my phone. And yeah, I'm really looking forward to my trip. So apart from that, I'll see you guys on Wednesday, and I hope that you guys have a great rest of your week. I don't see any ticker requests or questions, so I'll end the live stream early, and we get to trading on the trading floor on the Discord right now. All right, guys. Well, peace. Thank you very much for attending once again, and I'll see you guys when I see you guys on Wednesday. Peace.